slash training session, whatever you want to call it. Let's go ahead and get to it. I'm going to try to keep it quick. I've done, actually, I think, a pretty good job lately of keeping these things at a reasonable amount of time. So let's hopefully continue with that process today. Sorry, just had a message come in from a friend of mine. So let's do what we normally do. We're going to pop over and have a look at the futures market, see what kind of our key levels are, talk a little bit about just directionality, how we could potentially play this. We'll talk about the combination trading process that I mentioned yesterday. Remember, again, we talked a few weeks ago about breakouts. We talked last week about bounces, pros and cons of that, psychological aspects of it. Now we're talking about a combination of breakout or bounce and breakout. Again, as with any style of trading out there, they all have pros and cons. How you manage it has pros and cons. I just want to provide you the detail, the information, so that you can take that and create a trading plan that's going to suit you, because we're all different. What works for me may not work for you. What works for you may not work for the next person. And there's so many factors that fit into that, psychological factors, market factors around what we're trading, fears. I mean, there's a lot of things that go into it, but psychology is probably the biggest part of it. Money management, which is also driven by psychology at some level. So anyway, I just want to provide you with that level of data, especially now. A lot of people are reaching out. A lot of folks are uncertain right now. They're looking for some sort of specific direction, and I see more and more companies trying to take advantage of that. More and more companies are really pushing advertising around coronavirus, making income from home, yada yada yada. Situations haven't really changed when it comes down to making money from home. I mean, yeah, there's a lot of opportunity right now, especially in the trading aspect of it. Tons of opportunity, just driven by the volatility in the marketplace. But you still have to have a solid plan to put in place to take advantage of that volatility. So don't be fooled by all the advertising out there. No one's got anything special that just suddenly popped up around this. It is what it is. A solid trading plan is what you need in order to be able to benefit from the volatility and the opportunity that we're seeing right now. So anyway, again, off my soapbox. I tend to get on a soapbox about this stuff because it's near and dear to my heart. It bothers me when I see people try to take advantage of situations where we could just be helping each other, lift up all the time. Not that folks don't need to make money, because that's a big part of it too. Obviously, if you have knowledge and you're going to provide that knowledge and you do individual coaching and things, utilizing that knowledge, you should be paid for it. But at the same time, don't try to spend it as something that you just found out, some super secret that just happened because this is happening in the marketplace, and oh my gosh, it's bullshit. There's no super secret. Super secret's money management, risk management, consistent trading plan. Anyway, enough about that. Let's go over here and talk about the charts. The charts, what's going on? Starting up here at the top with the ES, the E-minis, the S&P 500. What's happening over there? Well, last couple of days we saw a bit of a run up. We've kind of topped out around 2,500. It hit it a couple of days ago and rejected off of it. Before the trading session yesterday, it hit 25, rejected off of it. Came into it again during the training session, or during the live market session, and broke through it, used it as resistance, pushed on up to the next level up here, which is around 25.25, 25.50. Couldn't stay above that, and rejected down. Now we're seeing 2,500 as resistance again, coming into the new market session. So really, right now we're kind of in this trapped right here between 2,500 and 2,400 on this. 30-minute trend is up, 4-hour trend is down. So, like I mentioned yesterday, depending on what your trading plan is and how you approach things in the marketplace, if your trading plan says if you've got a mixed bias, don't trade. If your trading plan doesn't have some filter for that, then obviously trade what your trading plan says. If you're only trading based on maybe a 30-minute, trade bias, then you would actually right now this morning be looking at potential. So this morning we're still on an upward bias. It hasn't flipped over yet. So, for the E-minis here coming into the new U.S. Regular trading hours, we're still on an upward bias here. Now that could change by the time regular trading hours occur. For me, I manage my bias based on the across here. I've got kind of a short term and longer term moving averages, and when they cross, that tells me that the bias has changed on that time frame. I look at it on a 4-hour and a 30-minute. Not saying that's right for you. You may have a different way that you choose to do that, but just have something that's consistent. So for me, right now the bias is still up on the 30-minute, but it's down on the 4-hour. So do it that what you will, and how you choose to trade it. We had been talking yesterday about looking at things on a 30-minute and then going down to a 5-minute to actually place trades. And if you're doing that right now, the 30-minute is still up. It hasn't crossed over. But again, we need to wait and see what happens once the regular trading hours kick in at 9:30 Eastern and see where we are. Right now, mixed bag. I kind of have a feeling that this is going to cross and we're going to see more short bias. But, we don't trade based on our feelings. We trade based on, or we should trade based on what's actually happening in the marketplace and what's happening with the various filters that we put in place in order to interpret the market and dictate our trading decisions. Over here on crude, crude on a 4-hour is down, crude on a 30-minute is down. 2,400, pretty key level. We saw that yesterday, broke through it, and it was fairly well supported. Then finally broke that level, closed above it, came back to retest, and we saw opportunity above 2,400. But now again, coming into regular trading hours this morning, we see crude breaking back down below 2,400. That seems to be our top edge for today, right now anyway. It seems to be our top edge. So, we're looking at potential shorting opportunities. The 30-minute is a short bias, and the 4 hours is short bias. So, if you're looking at the combination of those two filters, they're in agreement, and we'd certainly be looking to have crude continue shorter. Again, no one knows what's going to happen, but based on the filters, that's what we'd look at here. So, and I'll talk about how you can apply some trading tools to the trading method that we've been featuring this week and talking about more this week. So, what we'd be doing right now, if we're looking to play that combination of bounce and breakout, we'd be looking for shorter term pullbacks and then the ability to sell off of those and take things short. And we'll have a look at an MT4 chart utilizing a breakout EA that can be applied and utilized with that trading strategy we've been talking about. Gold is moving up. It had a little bit of a retracement back yesterday, but we've kind of hit right now. We've hit this resistance or support level really of 1625 right here. It came down to it yesterday, played around for really most of the day between 1625 and 1650 for the top edge. Right now we're coming up to 1650 before the regular trading hours start. We'll see where that goes. With gold, we'd be looking to be able to buy pullbacks on this. Gold is another one though, where that switched yesterday. Now we're okay. Gold is in agreement. We were just seeing this change over to be an upward bias again, along with confirming that 4-hour bias. So for gold, we'd be looking to potentially buy any pullbacks that we see here. And so 1640 was a resistance point. It's broken above it. We might see price float back to 1640 and then be able to look for potential buying opportunities off of that, or trade it utilizing that combination strategy that we've been talking about this week, where we're looking at it on a 30 for the bias, and then go down to a 5 and look for those breakout opportunities on pullbacks. So let's have a look at what that is. Let's go over here to a chart and just look at crude. So there's on my website there's a tool called the Advanced Breakout EA, and it's the one that's here on my chart right now. It's the Advanced Breakout EA, and it's got buys and sell with an entry point, stop loss, and a take profit. And if we're utilizing that trading method like we had spoken about yesterday and the day before, what we're doing is we're looking for a bias. I'll just move these buy orders out of the way here. We're looking for a bias on our 30-minute, then we're going down to a 5-minute, and we're trading utilizing something of this nature to set an order just like this, where we'd be looking at that 5-minute candle as it's moving up, and then as that candle closes higher, we'd put a buy at the bottom of that candle, a stop loss at the top, and then you'd want to put a take profit that's either 1.5, 2 times or greater what your initial risk would have been, and then you just simply enter the trade. And as trades, if it pulls back, so instead of waiting for a specific level to bounce, if we're in a downward trend, if it pulls back up, we're just simply, let's say it started pulling up here, right? We would just simply follow that up. Okay, well, it didn't fill there, let's move it up. Didn't fill there, let's move it up. And you just kind of keep ratcheting up your entry point and your stop loss point until finally you're filled, and then you'd be able to take that trade. So there's an advanced breakout EA that will control that for you. It automatically measures your lot size. It automatically, you've got you position what you want for your stop loss and your take profit, and then you just simply click the button and it activates that order as a pending order, waiting for price to come through there. Obviously, you need to turn it on in order to do that, but super easy to use. It's all sitting there just waiting for that order to be entered. Right now it can't do anything, obviously, because we're below the stop loss point, which typically you don't want to do that. I shouldn't have even turned that on. You want to make sure that your price, if you're selling a stop, is above the stop, because when it comes down, this is a sell stop, which I don't even know why my brain didn't pick that up. It's a sell stop. So if price is below the sell stop, when you activate it, it's going to fill at the current market price. So anyway, we'll have to close that down here in just a second. Oh, well, you didn't even see it because I'm on a different screen. Dadgummit. I just went through all of that on the wrong screen. Good Lord. Well, let's see, what can we do here? Let's get this. Okay. This was the screen I was looking at. Excuse me. This was the screen I was looking at here. Let me just reset this real quickly. So what I was speaking of here is we have when you put the advanced breakout EA on a chart, this advanced breakout EA will allow us to manage that trading method, I think, a little bit easier, because it's as opposed to having to constantly adjust and readjust your potential lot size based on the distance from entry to stop loss. This EA can do all of that for you. And let me just pull this around and we'll get it set up. So it's set up for foreign exchange trading. The quote pips, ticks are so much greater on oil that it puts the lines right together. But if you just simply click and drag the lines around, we can separate all of our, let's take this off. We can separate all of our lines out, and then we can place them where they need to go. So what I was trying to go through here was on oil, for example. If we're trading shorts on oil, and you can just hover over these to make sure that you've got your sell lines available to you. What you can do to trade this very, very quickly is let's say we're trading short, right? And we're looking for pullbacks, and of course let's just use this pullback as an example. Let's just use this one, the most recent one, as an example. So if we're trading short, we're looking for shorting opportunities. We're waiting for the price to pull back on this instrument. What we would be doing is, as it starts to pull back, we would be trailing our entry point up behind it, right? So it hit a bottom, it starts to pull back, it's closed higher. So maybe you put a stop loss. Okay, new candle, doesn't do anything. Till you put your entry point here, still doesn't fill it. So now you're just trailing up, still doesn't fill it. You're trailing up, still doesn't fill it. So we're adjusting at the close of each candle. So then this candle would have filled it. So we would have been in a trade, would have been stopped out here. But it's moved higher, so now we have a new trade to see, okay, do we have the ability to enter that new trade? There we go. So we put it here. Finally it enters, and we'd be in a trade from there. The beauty of the advanced breakout EA is, the stop loss obviously would be greater here than it would be here. So we would have to have a different lot size. If we're trading with money management rules and a percentage risk, your lot size on this trade would be a greater number of lots with the same dollar amount risk, or same risk to your percentage risk to your account, than it would be here, right? Much greater spread between entry and stop loss. So you would have to trade fewer lots on this trade than you would on this trade if you're using money management. If you're using consistent lot sizing, wouldn't really matter, but then that kind of destroys your percent risk. But anyway, that's a discussion for a whole other point, for a whole other day. Bottom line, the EA is a super easy way to manage it. If you want it, get it from Tools. It's all free, right? So we talked a little bit about ES. We talked about the crude. We talked about key levels here. ES is mixed. E-minis is mixed. 4 hours down, 30-minute is still potentially long. My gut tells me this is going to go lower, but we're not trading based on the gut. We're trading based on a trading plan, or should be. So we'll see what happens there. Gold is 4 hours up, 30-minute bias is long. So for that one, looking at potential pullbacks to be able to buy more on gold. Over on the foreign exchange side of things, I thought this indicator was available online. If it's not, I'll put it out there today. It's just simply a currency strength indicator that breaks apart each of the 8 most active currencies out there, and or most heavily traded currencies, right? The 8 majors, and compares them against one another on various time frames. And you can look at it on whatever time frame you set MT4 to see how the currencies are performing and how they're actually moving around. So this tells me, in looking at this, we've got our strong currency for the morning so far is the Aussie, and our weaker currency is the dollar. So looking at potential opportunities there to go long on the Aussie and short on the dollar. So if we were to set that up on let's say a breakout, we would look to take the Aussie long against the dollar, right? And you can use this through the day to see what else is moving. I mean, the shorter time frames, you're going to see more activity than others. But we typically just want to look at the more active currencies So this allows us to see which currencies are being most actively traded or having the most momentum. And then we compare those together and find the currency pairing that we'd like to participate in. Okay. Over on the crypto side of things, getting into a bit of a channel. We talked about that yesterday. We're really starting to see a channel develop here on Ethereum. Chances are something's going to pop. We don't know which direction it's going to pop. The trend certainly is down. If we look at a 4-hour, the trend is down. Here on Bitcoin, trend is down, but this one's really starting to close up on that 4-hour bias. The big thing I'm seeing here is just simply the channel that both of these have traded within over the last couple of days now. So just look, we've got a top edge. It's just continually being tested up here at 142 on Ethereum. Bottom edge really here recently around this 130, 131 area. Breakout there, I feel like it's a really good trading opportunity. Bias would say to look for the downside just based on where this is right now, but I don't see why we couldn't look at either side of this. Posting a buy stop up here and a sell limit down here to see which way it breaks out, and then just play the direction that has the most momentum when it moves. Same with Bitcoin. A lot of things coming up. Bitcoin halving is coming up very soon, and that's a potential for Bitcoin to just pop. So looking at this channel that we're trading within here, we don't know which direction it's going to go, but certainly looking above 6,800 and looking below, if we take this low right here, 6,450, and again buy, stop, sell, limit, and see if it pops, and if it breaks out of that channel, we might see some momentum one way or the other. Again, no one knows. Just because it breaks the channel doesn't mean momentum's going to happen. It could break the channel by a point or two and then come back, back into that channel. No one knows what's going to happen, but a breakout opportunity certainly looks like a good play based on how this has been starting to stack up in a pretty tight channel here. So that is really it. I'm going to go ahead and get off here. I've kept you about 22 minutes and a little longer than I wanted to be. A lot of that was due to me utilizing the wrong screen to try to show how this advanced breakout EA would work. But if you're utilizing money management, so over here, money management on the account balance versus a fixed lot size. If you're utilizing money management, then obviously as you move your stop loss and your potential entry point here, this is going to automatically calculate your appropriate lot size. This is a sell limit down here, so if you're setting this up, you don't want to activate this if price is below your selling point, because it's going to just fill you wherever it currently is. This needs to be above, but that's how it's meant to be used. It's meant to be used. Price is above the sell point, so we're going to only activate this if price is above it and it's breaking through, because it's a breakout trade, right? Same if you're on the buys. You don't want to utilize the buy side if price is trading above the buy level. You want to wait for price to be below it so it can break out above that buy side. So, but it's a pretty handy tool, and it makes it easy to manage that strategy that we were just talking about, or any kind of a breakout strategy. I mean, again, that tool is pretty diverse. So if you wanted to draw a trend line with it, you can draw a trend line and wait for it to break the trend, or you can utilize it like we just did right now as a breakout strategy, where you're just simply moving it and looking for that bounce and then breakout. So I think I've hit it all. Big takeaway is just simply trade safe. Keep yourselves in a position where you're not over risking anything on any one trade. Ensure that you've got a plan that's unique to you, because you're a unique person You need to have a unique plan. You need to have a plan that fits your mindset, your risk tolerance, and the instruments that you're trading. And once you've got that together, just stick to the plan. Mistakes are made, accounts get blown out because we don't stick to the plan. That's the end result. All right. So that's it for now. Have a great day. We'll talk to you soon.